We saw some small gains for stocks today as investors cheered some stronger than expected jobs data. For more, let's go to Courtney Donohoe at the New York Stock Exchange. Courtney.
Well, Pimm, the S&P reaching its highest close in more than 2 months, but a very different story today than what we've been talking about lately. Better than expected economic reports. Lately, we've been getting a lot of reports pointing to a slowdown in the economy, but today, a report seeing growth in the services industry and the ADP employment index showing an increase in jobs. Well, first, growth in the service sector picking up in July. The ISM number showing service companies have been expanding every month this year, but the number to especially look at, that's the employment gauge, and that came in just slightly over 50, but until we see gains for one full quarter above 50 and 50 signaling growth, then we will really know where we're headed from here. And speaking of jobs, ADP reporting an increase of 42,000 private sector jobs in July. It's the 6th consecutive monthly gain, but ADP says the increases, they remain modest, but still on everyone's mind this Friday's monthly government jobs report. Pimm.
Now, Courtney, stocks did pair gains earlier on in the trading session when we reported that China is stress testing its banks for perhaps a 60% drop in home prices.
Yeah, well, China's banking regulator told lenders to conduct a new round of stress tests, and the stress test will look at the ability of banks to handle a drop in residential property prices of as much as 60%. Well, people familiar telling Bloomberg that banks were instructed to include worst-case scenarios of prices dropping 50 to 60% where they've risen excessively, and previous tests assumed that home price drops of as much as 30%. Well, there's a lot of concern over possible loan defaults in China, and regulators, they've been tightening real estate lending. They've been cracking down on speculation since mid-April.
Now, Courtney, a lot of earnings coming out today, corporate earnings, but many of them in the media sector. What did we see?
Yeah, well, we had News Corp reporting after the bell, reversing losses from a year ago, reporting a profit of $875 million. Rupert Murdoch adding to News Corp's subscription-based assets. In the meantime, Time Warner coming in better than estimates. Cable TV and magazine advertising, that increased, and sales for Clash of the Titans, that also helped. But a different story at Time Warner spinoff AOL, reporting more than $1 billion loss. It's because of charges tied to a decline in its share price. CEO Tim Armstrong saying today the company was very sick and he's working to make it healthy. And CBS gaining today after posting better than expected results on local TV ad growth, plus electronic arts. That also was higher. Online games like FIFA World Cup and iPad games, that also helped the company top estimates. Pimm.
Thank you very much. Courtney Donohoe reporting from the New York Stock Exchange.